Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the three major US indexes. Now, lots happened during yesterday's trading session. We did have our first sign of deterioration since October. Of course, we've had this 5-month incredible rally, but for the first time since pretty much November 2nd, 2023, we are now trading back below the 50-day EMA. So that is the first sign of significant deterioration within the market. But that being said, I still think this is a buyable market. Maybe not today, but I think as we move into the back end of this week, we will see a fantastic buying opportunity. I think the floor for the S&P 500 is between 5,000 and 4,990. So roughly this area here, and that's because if we get the rally from the October lows all the way up to the highs, it represents a 0.36 fib area. So this is an area where I do expect to see some support. So in terms of percentage points, we could potentially see a further decrease of 1%, but then from there, that offers a fantastic buying opportunity to go and test this area of resistance and potentially break above it and go back up towards all-time highs, which sit around 5,284. Now, I also want to quickly mention, this is we are on the cusp of seeing a full correction here, currently down 4.4%. So if we were to correct 5%, where does it take us? Down to pretty much 5,000. We haven't had a 5% correction or larger since October. Of course, we saw the last 5% correction back in August through to the October stim, where we actually corrected around 10.5%. This was overdue. Of course, every calendar year you do historically see 5% corrections. So the fact that we hadn't seen one in over 5 months was telling us that we were overdue one by 1 month. So quite frankly, I actually want us to continue to decrease slightly here to just tick that off. And then from there, we can start to look to go higher. Team, look, I really think this is a fantastic buying opportunity. Please don't forget there's $6.1 trillion still on the sideline, and we're about to start a cutting cycle. If we just quickly go over for 10-year, in my opinion, we've just come off this 5-wave move towards the upside, and we're currently in the cusp of forming this ABC correction. Yes, the 10-year has been rallying significantly, but I think that that's going to come to an end. I don't see us breaking back above 5%. In fact, I see us turning down and breaking below the lows that we formed back in December, which sat around 3.8%. I've been saying it to my signal team that I am expecting a big move all the way into the month of April, where we potentially go and hit 3.25%. That, of course, is going to be a big tailwind for US equity prices. Many investors right now are skeptical and scared to invest in the markets due to this conflict between Israel and Iran. Let me tell you right now, nothing is going to happen there. Okay, a few weeks prior to Iran attacking Israel were coming out and asking for missiles from the US and from the UK just to attack Gaza. So they're not going to go out on a full blown out escalation against Iran because they do not have the firepower. They can't fight 2 wars at once, and also Iran doesn't really want to get it in the conflict either. Iran would have easily. It was so obvious that Iran basically let the White House know that they were going to do this attack. The US obviously helped Israel block the drone attacks, and then as soon as the attacks happened, Iran come out and publicly said that they considered the case closed. So I don't see much further escalation here. It was just to kind of protect Iran's image as they had to retaliate due to their commander being killed in Syria. So I do see there being a fantastic buying opportunity here. I'm not looking too much into this conflict, and as history will tell you, whenever there's conflict, the stock market bizarrely does perform rather well. If you was a seller back on the 7th of October, for example, well, you'd be kicking yourself right now, because that of course was a date when Hamas killed loads of Israeli civilians that, of course, pretty much kickstarted the Gaza versus Israel conflict. But of course, the market went on to rally 23%, and still to this day, we're up around 18% here for the S&P 500, which is incredible return. So you shouldn't necessarily consider selling your stocks just because there's a global conflict, because history will tell you that the actual market does return pretty well. But for the day here, currently trading at 5,058, I could easily see us falling another 50 points to go and test 5,000. That is where I would be a big buyer. Then finally, just moving over to the Nasdaq100. Nasdaq is actually having a positive day. We're starting to see some positive performance from some of the big tech names. Nvidia's up very nicely, up 1.73%. We're seeing stocks like AMD up as well, up around 2.5%. Microsoft up pretty big today as well, up 0.8%, bouncing off the 50-day EMA. This is exactly what you want to see. If I was seeing the complete opposite and I saw technology stocks, some of the big core technology stocks within the Nasdaq100 starting to break down lower, then I would be quite concerned. But the fact that technology is outperforming today tells me that we're not going to see much more than a 5% correction here. Now, if we just quickly go from the highs to the lows here, the highs, of course, were achieved a few weeks ago. To the lows, the Nasdaq100 corrected 4.54%. So again, we still haven't achieved that 5% correction. I feel like we could easily fall another few hundred points to quickly tick that off, and I'm kind of hoping for that. But again, I see it as a fantastic buying opportunity. 0.236 fib area here for the Nasdaq100. If I just quickly update us to that swing high, that takes us up to roughly around 17,500. So 17,500 should act as a very good supportive area here for the Nasdaq100 to be a buyer. Then finally, just moving over to a DowJones30, United Health has been helping this indices, outperforming today, up 0.33% for the day. 37,850 is where we currently find ourselves trading. There's major support here at the 200-day EMA, which sits around 36,735. But again, if we just draw that fib chart from the October lows up until the highs that we achieved just about 2.5 weeks ago, you can see we have actually broken below the 0.236 fib area. So our next area of support sits around 0.382 fib area at around 37,050, so just above the 200-day EMA. So there's plenty of support here. I feel like it's quite healthy that the fact that we are correcting, as I mentioned, it was overdue. The DowJones30 is actually down 5.25% from its highs. So we've already started to correct in. I think it's only just a matter of time now until the Nasdaq100 and the S&P500 follow suit. And I'm going to be a buyer because I don't believe that the Israel-Iran conflict is going to be anything bigger than what it is today. And also, there's $6.1 trillion sat on the sideline of people who have missed these significant rallies over the past 18 months who want to get involved in the market. And if you sell your shares, they're just going to come in and buy them. And then, of course, you cannot forget we are about to enter a rate cutting cycle. So I'm very, very bullish here for the stock market despite the huge move we've had. I and my Signal team still have lots of buy trades in individual stocks as well as the indexes, and if you'd like to copy those trades, then make sure you join my Signal team at dailymarketmovements.com. The website link is in the description of today's YouTube video, so scroll down, click on that link, it will bring you to my website, and then once on my website, if you click this join now button, you will be able to join my Telegram group chat and copy my own personal trades that I post and take on my own trading platform, as well as receiving my daily market research that I post prior to the US markets opening daily. Guys, that's going to wrap it up for today's video. Thank you very much for tuning in, and I'll see you all tomorrow. But yeah, moral of today's video is I'm a dip buyer here despite the volatile headlines that we're seeing across the world with regards to the Middle East.